example 1.6. Now this example is the same as the previous one, but there's one difference. And that is in number 4. In the previous example, we had a situation where the trading stock was sold to the shareholder. Now it says this trading stock had a cost of 400,000 rands. At the time that the liquidation took place, it had a market value of 740,000 rands. The shareholder requested that the stock be distributed to him as a dividend in specie. Okay, that's different. So the previous one, it was sold. Now they actually takes the cash. Now the biggest thing that you have to remember here is remember the company is liable for the dividends tax on a dividend in specie. Very important. Okay, how is it going to influence us? So, first up, everything, opening balance is the same. The accounting profit on the sale of the land and the sale of the machine, same. Okay, everything's the same, guys. Tax, the tax treatment, sale of the land, sale of the machine, same. So the only thing that we have to talk about is that stock. Okay, that was requested. So the first thing we do is let's do the accounting implications of the trading stock. What is the accounting implication of the trading stock? Right. It was sold for nothing. But it has a cost of sales or stock written off of 400,000 rands. So the net effect there is that that creates an accounting loss for us. Think about it. You're writing off stock. You're not getting money for it. It's accounting loss. Okay. What happens from a tax perspective? So this is now the tax calculation. Right, trading stock. We have an opening stock balance of 400,000 rands. And then it is distributed as a dividend in specie. So what do we do if we distribute trading stock as a dividend in specie? You apply section 22.8, which says you must recoup the market value of 740,000 rands. Right, everything else would then be the same. It works out the same as in our previous example. So our tax liability, which you've calculated, is 3,455,200. Okay, up to there. But now, what is important? Let me actually just show it like this. This tax liability over here. There is the income tax liability, which we just calculated and saw, 3,455,200. And very important, when I made the comment here, when we read the question, I said, remember, the company is liable for the dividends tax if it's a dividend in specie. So dividends tax. And compare this to the previous examples, guys. It was not shown here. Now the dividends tax is the 740,000 times 20%. But what is important here? This is only if it is a natural person shareholder. Okay, so let's for now, so what are we looking at now? We're now only looking at a natural person for now. Natural person, natural person, natural person. Right, so what are we looking at? Natural person. So follow the whole time, natural person. Okay, so now we add up everything as usual. Natural person, guys, we're looking at a natural person. Keep it in mind. $12,696,800, and I just want to confirm that my total is the same. Yes, it is. Right. So $12,996,800. What are we looking at for now, guys? Just for now, natural person. So make sure that you see that amount, $12,696,800 times 20%, gives us our dividends tax. I'm only looking at a natural person for now. Okay, so make sure that you see now. We're looking at it for a natural person. The dividend received is 12,696,800. 12,696,800. That full amount, sorry guys, 12,696,800. That full amount is exempt. We then received 4 million rands contributed tax capital. The base cost was 6 million rands. Gives us a capital loss of 2 million rands. We then look at paragraph 19, and remember, still for a natural person. Was it exempt from income tax? Yes. Was it exempt from dividends tax? So what are we referring to this? Was there dividends tax on that amount? Yes, there was. Right? So the exempt dividend is null. So how much of my capital loss I calculated exceeds null? The full capital loss. So the full capital loss will be allowed. Okay, if this is a natural person. But now, we are doing it for a company. Company. Okay, company, guys. We're looking at a company now. So the tax liability for a company, there would still be the same income tax, but this dividends tax over there would be null. Why would there be no dividends tax? This is the dividends tax on the dividend in specie. There would be none because there's nothing for companies. So that would change my available reserves to 12,844,800. And just to show you guys, it's in our solution. Just make sure we are looking at it now for a company. The dividends tax, if it's a company, is null. Right? So we go to the shareholder. So what is the shareholder? If the shareholder is a company, then the dividend is 12,844,800. The full amount will be exempt. Right? And sorry guys, the one thing I actually didn't do correctly here is I've only spoken here about the cash dividend. So for the company and for the natural person, both of them would also receive a dividend in specie of 740,000 rands, which would be fully exempt. Okay, both of them would have received that, company and a natural person. That's the trading stock. Sorry, I just didn't include that there. So the cash dividend, if it's a company, 12,848,100 and 740,000. Okay. 4 million rands proceeds, base cost of 6 million rands, gives us a capital loss of 2 million rands. How much of that is exempt if this is a company? Is it 100% exempt from income tax? Yes. Is it 100% exempt from dividends tax? Yes. So what is the exempt dividend? It will be the sum of 12,844,800 plus 740,000 rands, which gives me 13,584,800. How much of that 2 million exceeds 13,584,800? No amount, so no amount will be allowed as a deduction. Right, so as you can see, just make sure that you add it up there. So, what is the difference in this last example we've been looking at now? What I want you to just see in this example 1.6. What is the most important thing for you to see here? Is to remember that the company is liable for the dividends tax on the dividend in specie. So what it does is it affects this calculation when we do this calculation that they want us to do, this table. Right, that's what you see here on the screen. What it does is it affects this tax liability line there. So it decreases your amount of profits which are available. So let me just explain to you and quickly show you. When this was a natural person, Okay, let me just find it quickly. When this was a natural person, which is in, sorry, part 1. When this is a natural person, your amount available for distribution is 12,696,800. There's a deduction of 148. So 12,696,800. Compare that to when it is a company, 12,844,800 and 0. So instead of 12.6, it's now 12.8. So can you see there's more money available when the shareholder is a company? Why? Because there was less dividends tax paid out there. So the dividends tax affects your retained earnings, but only for dividend in specie. So go and compare this to example 1.5, and there you will see that the amount available for distribution to the shareholder is exactly the same whether it's a natural person or a shareholder. Right, whether it's a natural person or a shareholder, so let me just give you a quick indication in example 1.5. Okay, so here's example 1.5. Amount available for distribution, 13,584,800, and I want you to see that amount is the same for the natural person and if it's a company. Right, so here number 4 is when it's a natural person, 13,584,800, and number 5 is when it's a company, 13,584,800. Can you see? They agree. Compare that to example 1.6 again, right? Example 1.6. Let's look at the taxable income. For a natural person, 13,436,800. For a company, 13,584,800. What's the difference? It's the cash amount, 12,696,800. That is different. The dividend in specie amount of 740,000 is the same, but the cash amount is different. Why is the cash amount lower for the natural person? Because there's dividends tax, and if it's a dividend in specie, the company pays it, so the company's profits decreased. So if the company that you are a shareholder in pays dividends tax on dividend in specie, you will get out less money. That's basically what the case is there. So guys, that is pretty comprehensive for a liquidation. If you can work through this and you can do this, I do believe that you should be able to answer basically everything. The majority of your marks, again guys, lies in the calculation of the tax liability. The tax liability. So make sure that you get that right, and that should be no problem for you at all because you've been doing that the entire year so far.